Our tax code is so confusing and full of surprises. If you don't know the rules regarding working and taking Social Security, you might be surprised to find out that your Social Security income can be reduced to zero. That's right, all the way to zero after you start taking it. In this video, I'll tell you about these rules so that you can make an informed decision about whether or not you work and take Social Security at the same time. I'm Dan Lohmar. I'm a CFP professional with United Wealth Management, where we specialize in PRAP management and financial planning for pilots at United Airlines. And like many of you, my business partner, Alan Bewley, and I are both pilots at United. Welcome to my video about the implications of working and taking Social Security. All right, let's talk about working and taking Social Security. Why is it important to know this? Because if you retire at 65 and you plan on taking Social Security right away, and you plan on working, and you don't know about this, guess what? You're not going to get that Social Security check. Your benefits can be reduced to zero depending on how much money you make working full-time or part-time. So that's why this is important to know. It's not super complicated, but these are the basic rules. It applies to Social Security benefits before your full retirement age. Social Security benefits can be reduced to zero. It also applies to spousal benefits as well. So if your spouse is taking spousal benefits based on your earnings record and he or she is still working, their Social Security benefits can be reduced as well for the same rule. And then again, it does not apply once you reach full retirement age. Two very good sources to look at if you think this might affect you. And there's a pamphlet online, a link to a pamphlet put out by the Social Security Administration. And then there's a retirement earnings tax calculator, which will show you what your reduction might be. I'll have those in the show notes on YouTube. What's the rule? Social Security withholds $1 of benefits for every $2 above $17,640. That's in 2019. It goes up a little bit each year. So that's not a real high threshold before it starts eating into your Social Security benefits. It applies only to earned income and self-employment income. It does not apply to pensions, IRA distributions, 401k, money coming out of the PRAP, interest, capital gains, rental property. It does not apply to that. It's just strictly earned income and self-employment income. Real simple example here. Current age 65, full retirement age 66 and a half. The threshold is 17,640. This person earns 19,640, so that's $2,000 above the threshold. So Social Security is reduced $2 for every. It's reduced $1 for every $2. So it's reduced by $1,000. Another quick example showing it reduced all the way to zero. In this case, the Social Security benefit is $30,000. This person earns $67,640 or greater. And Social Security income is reduced to zero because they're making $60,000 more than the threshold. So there is a rule for the first year. So obviously this does not apply to the first year you retire. Let's say you're going to retire at 65 in June. You're going to take Social Security benefits right away. And during the first 6 months of the year, you make $150,000. It does not apply during those six months of the year. Social Security Social Security Administration does not start to look at this rule until they consider you retired, which is when you start taking Social Security benefits. So they look at it on a monthly basis from that point forward. So if you make a bunch of money in the year before you retire or before you start taking Social Security, you're okay as far as that goes. Now, the year you reach full retirement age, there's a slightly different rule. You're allowed to make a little bit more money in that year, and the threshold is higher, $46,920, and only $1 is withheld for every $3 earned above the threshold. And it only looks at the months leading up to your full retirement age birthday, so a little bit more leeway in the year that you turn your full retirement age. And here's another thing that's very important to know is that if you do get in a situation where you do have to work, you need to make extra money or whatever, the one good thing to know about this too is that your benefits aren't actually lost, they're just being withheld. And so what they do is at full retirement age, so any amount that has been withheld it gets added back into your monthly benefit from your full retirement age going forward. So it's just an adjusted amount. So an example would be if you retired at 65, you took Social Security at 65, and then for some reason you earn all the way up, you made money, you had to work and you earned money all the way up to your full retirement age and you exceeded the earnings test. Basically, your Social Security benefit from full retirement age onward would be about the same, as if you had just delayed taking Social Security all the way up to your full retirement age. So it's good to know that the benefits aren't actually lost or just being withheld. And again, from full retirement age and beyond, you can make as much money as you want. It doesn't make any difference. It doesn't reduce your Social Security benefits. The one thing you might want to know is that if you have earned income or self-employment income, you still pay Social Security and Medicare taxes on that income. And if that income is not in your highest 35 years, it's not really going to add to your Social Security benefit much. So that's just good information to know there. So those are the highlights of working and taking Social Security. Again, the most important part about that is just knowing that this test exists. And if you're counting on Social Security income and working at the same time before full retirement age, you just might be surprised by that. So that's what the most important thing is here about that. In my next video series is about Medicare costs and surcharges. And so that you know when that video comes out, go ahead and subscribe and hit the bell icon so that you get notified. There's a lot more to know about Social Security when it comes through retirement planning, and I will have a separate video series just about Social Security benefits and strategies. My next video is about Medicare and taxes and avoiding the Medicare cost cliff. I'm Dan Lohmar, CFP professional with United Wealth Management, where we specialize in PRAP management and financial planning for pilots at United Airlines. And like many of you, my business partner, Alan Bewley, and I are both pilots at United. Now, if you're a United pilot and you have questions about anything in this video series or just want to consider us for financial planning and PRAP management, reach out to me using the Submit Your Questions link in the video description on YouTube. Also, come check out our website, unitedwealthmanagement.com. Until next time, stay the course, invest with a plan based on science and evidence. Everything else is just guessing.